Good morning, friends, and welcome to the Sharekhan's pre-market update. First and foremost, we will take the call on the global markets. Yesterday, we saw the US markets almost closing on a flattish note. The Dow closed on a negative note of only 7 points, whereas Nasdaq was up by around 24 odd points, and S&P was also up by around 0.6%. A couple of results in the consumer discretionary sector came out better than expectations yesterday, and we saw good buying happening in those companies, which pulled the S&P up by around 0.6%. As far as the government bond yields are concerned, they were still, although they were low from the Monday's 2.8%, but overall it is still trading at a 2-year high. All eyes are now going ahead at the minutes which will be released today for the FOMC meet, which was held in July, which will pave some clarity as to what the officials of the Fed plan regarding the tapering of the stimulus going ahead. So taking further cues as to what the minutes come out with, we would have a clue as to how the global markets would span out going ahead. As far as the Asian markets are currently trading on a negative note, the Hang Seng and Nikkei are trading negative, but SGX Nifty is trading higher by around 50 odd points because of some of the steps which RBI has taken yesterday evening, which are positive for the banking sector, which we'll be discussing more in detail going ahead. As far as the flows are concerned, yesterday we saw the FIs were net sellers. The provisional figure was negative to around 1,424 odd crores, whereas at the same point of time the DII have turned positive to the tune of around 1,000 crores odd. Going ahead as to how the markets would span out and taking the clue from the derivative data, whether this is just a pullback going ahead or whether we have a good strong rally, we will take some further cues from the derivative analyst. Thanks.
Good morning, friends. Let's have a view at derivatives. Friends, in yesterday's trade, we have seen that during opening bell, markets have witnessed a carnage, but soon it recovered sharply from day's low and has been hovering near the 5,400 mark yesterday. Now, during this course of time, we have seen some short positions been accumulated in the market, and PCR ratio has also seen an uptick from 0.89 to 0.91. Talking about the options activity, friends, it's clearly visible on the option matrix that 5,300 and 5,200 call as well as put option continues to see good amount of activity taking place in the market. Whereas on the call side, we have seen 5,400 call option yesterday after a bounce has seen good amount of activity happening place, and markets have managed to close near 5,400, and on higher side 5,500 call option has also seen good amount of activity taking place. Now we are trading below our VWAP. A bias for the market is down, but we feel that we may see some pullback in the market, and SGX Nifty is also suggesting the same. We feel that the pullback really would continue up to 5,500 levels on the higher side, and 5,400 on closing basis would continue to act as a good support for the market. From intraday perspective, Idea Cellular is looking good, so one can go long by maintaining a stop loss of 164 rupees 15 paisa. And JP Associate is also looking good, so one can go long with stop loss of 32 rupees. Thank you.
As far as the MID ideas are concerned, today we have some of very strong news for the banking sector. First and foremost, a positive news for the Indians. Saw ratings of as we have yesterday seen, the Moody's has retreated stable outlook for the India's rating. Now S&P has also maintained its BBB ratings and outlook on India's sovereign credit rating, which is positive, and we would see some good reaction in the markets today. Friends, RBI has issued some very positive steps for the banking sector. RBI has issued a set of measures which is aimed at twin purposes. First is arresting the dip in the long-term bond yields and shielding banks from incurring financial losses, that is the M2M losses which the banks have been suffering due to the declining bond prices that we have seen in the recent days. Instead of squeezing the money, the monetary tightening from the system, RBI has now announced to conduct an open market operation, that is the OMO, to purchase and not sell the government bonds of rupees 8,000 crores from the market on 23rd of August 2013. And RBI will purchase only long-term papers, including the government securities, offering 8.15% rate of interest. There has been some relaxation by the RBI in the HTM category so that the M2M losses will not hurt the bank's balance sheet. The RBI has now allowed bank to hold the SLR, that is statutory liquidity ratio, bonds in held to maturity category at 24.5% of their respective total deposits on net demand and time liabilities. Earlier, the RBI had mandated to bring it down to 23% from 25%. Also, banks currently hold different bonds, generally in the three categories, that is the H2M, the AFS, and the HFT categories. Now, banks are now allowed to transfer the SLR bonds to the H2M category from the AFS or HFT categories up to the limit of 24.5%. Since July 15th, bond yields rose sharply by around 150 basis points. Therefore, banks are now required to book M2M losses for both the AFS and the H2M categories. But a shift from these two categories, from the H2M categories, will save the lenders from incurring such losses. It is estimated that the entire banking industry may have incurred around 40,000 crore odd, inclusive of all bonds, GS, or the corporate papers lost due to this. Not only this, in addition, banks are now can spread over the depreciation, if any, on account of the M2M valuations of securities held under the AFS of the H2M categories over the remaining period of the financial year. So the next 3 quarters, they can actually distribute the losses if they would have occurred due to the M2M on the bond yields in the equal installments. Now, based on this action, we strongly expect a good rally in the banking stocks today to the tune of around 5 to 10%. We are positive on ICICI Bank, Axis Bank, IndusInd Bank, State Bank of India, and Bank of Baroda. So the recommended action in the banking stocks is ICICI Bank. The yesterday's closing was around 830, so we recommend to go long on ICICI Bank with a stop loss of 814 for target of 855 to 871. Similarly, Axis Bank, which was trading at around 981 in the yesterday's closing price, we recommend to go long with stop loss of 961 for target of 1010 to 1029. And State Bank of India, action to be taken is long State Bank of India, stop loss of 1523 for target of 1600 to 1630. On the news update, Federal Bank, the RBI won't be allowed to buy a Federal Bank shares to FIs as holdings has crossed the 49% limit. On the long ideas, Reliance Industries will recommend to go long today because of the rupee, the sharp fall that we have seen in rupee, which will boost the earnings for the oil and gas sales for Kane India and Reliance Industries. Both companies, which are dollar-linked prices, have risen around 17% in the 4 months. So action to be recommended is long Reliance Industries with a stop loss of 809 for target of 850 and 865. Positive news for Fortis Healthcare. Fortis Healthcare has completed the sale of its entire 65% stake in Vietnam-based hospital chain Fortis Horn by My Medical Corporation for USD 80 million. Action to be taken is long Fortis. Stop loss of 94 for target of 99 to 101. JP Power based sells stake in 2 hydropower projects, include its 300 megawatt Baspa and 1,200 megawatts of Karcham Wangtu plants to reduce its high debt burden, as company has a consolidated debt of more than rupees 20,000 crores, which will reduce the debt, and action to be taken is long JP Power with a stop loss of 13.5 for target of 14.5. Financial technologies, as we have seen the news yesterday that the National Spot Exchange has failed to meet the first payout obligation of 174.72 crores to the investors as it was scheduled. And the NSCL board has sacked its managing director and the chief executive officer, Anjali Sinha, and other 5 top executives. Action to be taken is to go short on FT with the stop loss of 144 for target of 136 and 133. That's it, friends, from the MID Ideas update. Thanks and have a nice trading day.